Okay, good morning, good evening, good afternoon, wherever you are. Again, this is Paul Siegel. Today we have another discussion today about banking and bankers. So I hope it's an open discussion, and I hope you all ask questions. I'm here to answer any questions you have about the field of banking and financial services. I'll start out with a framework so we can get kind of accustomed to a way of covering a topic each time. I really am eager to hear what you want to ask and what you're interested in. We can take it into a diversion if you have interest in entrepreneurship or other areas, but I'll tend to cover just finance and banking in these talks. I'll try to keep them to half an hour. Last time we went about 45 minutes. The point is to answer your questions, to get engaged, to take it into areas of interest, both current in the industry, in the world, what's going on. I don't know much about crypto, so I won't get too into that. That's where I'll have guests. But as far as other areas of finance, I've pretty much touched most of those areas. I like to say to people that, in fact, I've been in about 45 different businesses in my career, which means I've tried a lot of things. Some of them have been very successful, some of them not. And that's what you should do in your life. Try a lot of things, experiment. That's the best way to learn. And set up experiments in a way that you learn even if you fail. Okay, so that's a big picture set of comments. Let's get into discussions of finance. So when I want to talk about banking from a bird's eye point of view, from a banker's point of view, let me take you into what we call financial structure and strategy. Hopefully you can see the screen clearly. Now, what is financial structure and strategy? Financial structure and strategy is the way a financier, someone who is working with companies and governments. I think I mentioned that and touched on that a little bit. Governments actually raise money as well. But someone who is in the business of, let's call it money, transacting money, structuring money, etc. So let's talk about what we call financial structure and strategy framework. Now this is complicated. You can take a screenshot. I can share some of these slides on the line. Obviously, by the way, I don't do this in as structured a way as many. Follow us, subscribe to the channel. You'll get more about what we're doing. Register on our website at starweaver.com. We've got a very simple way of getting started free. We're changing the website in the next day, so you'll next few days, meaning by Monday, you'll see an entirely new front end. It'll be very easy to just start absolutely free. So back to this financial structure and strategy framework. When most people financing companies think about those companies, they tend to just think about what can they do for them. I can lend you money. I can offer you risk management services. I can sell you money management services. In other words, such things as investing your capital in various, or your earnings in various areas. I can sell you treasury services. Treasury services are things such as cash management, international trade finance, currency finance. Most bankers think of the problem as, how do I sell what I have to a company? Well, let's look at it very differently. The best and most effective way of acting as a banker or acting as a financier is to think about your client's problems, to think about the companies you serve, think about the markets they're in. So if you look at this over here, and let me see if I can do this with a pointer or not. I don't think I can do it with a pointer, but I'll do it with my mouse. Okay, so let's look at the very high level areas that a financier should look at their clients in. We'll talk about the so-called macro factors. Those are the things that are affecting the economy. We'll talk about the life cycle. Where is the company in its life cycle? What strategic and financial choices is it up against, is it making? What are the company dynamics? Okay, what's the internal dynamics? Who are the decision makers? Who owns the company? What are the drivers? Is it the CEO? Is it the CFO? Is it the children of a former CEO or CFO that make the decisions? Obviously, as we all read in the news, you'll hear about the heirs of a large company being the decision makers within big companies. Does Bill Gates make the decisions within Microsoft? No, but he's a big influencer, of course, even though he's not active in the business today. So there are going to be decision makers and influencers, and you need to think about that when you're talking about a company. And there'll be business and financial issues. There'll be the volatility of the company's cash flows. Where are they? And I'll get into operating leverage and financial leverage and what the differences are shortly. And what is the company after? In most cases, it's called the optimal capital structure. How does the company structure itself so it drives shareholder value? Now, what does shareholder value mean? Shareholders are the stakeholders inside of a company that own the equity of a business. Shareholders or stakeholders can also be the employees, it could be also the vendors, but shareholders in particular look for certain things. Return on their money. Is the stock price going up? Is the company liquid? Do we have enough cash in the bank so if there's a downturn, we can remain afloat? Okay, so in terms of thinking about a company, you have to think about what's in it for them, what's in it for the company, and what's in it for shareholders. So the optimal capital structure is one of those key things. Before you get into anything that the financial institution does, that is the so-called solutions, that's the way they describe it inside of a bank or a financial institution. Before you get to any of that, you have to think about what's going on in the economy and the industry, what are the life cycle choices that the company has made, both from a strategic and financial position, and the company dynamics as I described them, and what drives their decision making. Then you can think about, does the company need to borrow money? Does the company need to raise capital or equity? Does it need to do leasing, what are called off-balance sheet transactions? What sort of risk management problems does the company have? Okay, so all of this drives the business, the banker's view of a company and how the company can be helped. Okay, so I will get into this in a little bit of depth at this point, but again, I talked about financial decisions and business decisions. Should this company, to achieve the goals of the shareholders, spin off a division? Should they buy a company? Should they restructure their business? Should they turn their debt into equity by negotiating with the lenders, etc.? And then there are so-called product choices that help them make these decisions. The product choices are driven by, does this company, which may be small or may be large, have access to the capital markets? Do they have access to capital? Or are they, what's the flexibility of the market? What are the costs? Let's say the flexibility of the market. What is the market doing today? What are interest rates like? Are they high? Are they low? Are they anticipated to get high, go higher, or are they anticipated to go lower? These are things that you learn in finance about the yield curve, the shape of interest rates, the shape to say what is the interest rates today, short term, what are they midterm, what are they long term, and that forms a curve, so-called yield curve. What are the spreads? What are the risks today? Is it a high risk or a low risk environment? Today, if you look at the markets, you'll see interest rates are very low. You'll see that companies can borrow money at virtually nothing. And the spreads, that is to say, how much more risky is one company versus another, or versus the risk-free rate, which is called the risk-free rate, government lending rate. What is the credit spread off of that? Okay. And what are the equity markets doing? What are the investor appetites? We won't get into swaps now or foreign exchange or volatility, but the markets move up and down. So what happens in this entire framework is you look at a company from the company's point of view, not from what you want to sell. This strategy can be adopted way beyond finance, and it can be adopted in technology. What, if you're a technologist, is your company doing? Before you can say, I code in React, or I'm a cloud developer, you probably need to know what the company is doing. What are they trying to do? What are their strategies? What business are they in? You probably need to know what business Amazon is in before you go work for Amazon. Now, I know that sounds silly, but there are many more esoteric businesses that people jump into, and the first thing in an interview when asked, why do they want to work for the company, is they might say, because the company is successful, my friends work there. You need to know, more importantly, what the company does and why you're passionate about it. Or maybe you're not passionate about it and you shouldn't go work there. So the same thing here. If you're a financier, you need to be passionate about the clients you serve. What are those companies doing? Where they're in their life cycle, etc. Okay, so I got into that at a very high level. Let's see if I can get to the next slide. Okay, now let's get into the dynamics of a business. Again, many of you may think, hey, this has nothing to do with finance. But if you go back to the slide I just talked about, it has everything to do with finance. You cannot finance a company unless you understand what it does, why it's doing it, what life cycle it's in, what are the dynamics, where is it going, etc. It's just it's a design for failure otherwise. Again, the economy. Are we in an upswing? Clearly, the United States and the global economy is pretty much in a very strong upswing right now. Yes, there are some concerns about the prices of fuel in the United States today and other things, but for the most part, we are in a very strong, raging economy. I think last month's job employment numbers was up 500,000 people. Now, there are many reasons for that, but regardless, it is very difficult today to find employees that are qualified with the skills and abilities that companies need. Part of the reason we're in the training business, probably most of the reason we're in the training business, to help people get skills that they need. So again, think about the economy, think about the industry. Is this business a commodity? Is it a niche product? Okay, commodity versus niche. Commodity are things like rice. Rice is a commodity. Why? Because rice is very undifferentiated. Yes, there's wild rice. Yes, there's Asian rice. Yes, there's this type of rice. And that's one of the reasons these companies try to change their products and move their products differently. But for the most part, rice is rice. If you're a rice manufacturer, please don't take this as a criticism. It's just a simple fact. It's very price competitive. The size and the share of the market will matter, and it's very cyclical typically. This is the buyer's advantage. That is to say, a company that's in this business better start thinking about some other businesses they should be in. And if you're financing that business, you better know that if they're only in that business, maybe they should diversify. Maybe they should enter into multiple commodity businesses, some which are counter-cyclical. That is to say, some of which move against the other product movements. So I can't think of two offhand, but it's just like Eskimos selling ice versus oranges being sold from Florida. They'll probably move in different directions in terms of the price of those two things: the ice from the north versus the fruits from the south. Let's talk about the niche products. Niche products are things that are high value added, unusual camera parts. Niche. Yes, everyone has a camera these days. On their phone, if nothing else. But this is kind of an interesting discussion that I just thought about. Niche products. So everyone has a camera on their phone, and most of the phones are fantastic, and I love cameras, and I'm involved in a lot of photography. But the reality is Nikon, Canon, Sony, all the other manufacturers of camera equipment need to get more and more precise, high quality, unusual in what their cameras do in order to distinguish themselves. So these are products that are high margin, they're proprietary, they're unusual, they allow the manufacturer to add value to the consumer again. And again, all of this is what are the industry issues affecting the industry. When the Exxon Valdez disaster occurred, the oil industry was in deep trouble. Why? Not only because there had been massive environmental damage, but the issue that was affecting the industry was a lot of very bad public sentiment and governmental intervention and actions that could cause the industry and each of the companies in the industry massive trouble. Witness the technology business today. How many of the tech companies are under pressure to maintain your private information? Private. In Europe, it's much stronger than the United States. Maybe the United States will adopt those European policies. But all of these factors, even if you're a small company, matter. Small companies go out of business very quickly when big problems and big changes occur in the industry. Okay? So again, these are some of the issues facing businesses in macro context. Let's talk about the key questions in the economy. What's the impact of economic change? What are the dynamics in the industry? These are some of the things I just discussed. Where is the industry in the economic life cycle? Again, I talked about that as well. Is the chip business on the upswing now? Of course it is. A chip is in everything. A chip is in your watch. A chip is in some glasses. A chip is in all sorts of monitoring devices, whether they're health monitoring remotely. There are all sorts of IoT devices. All of these are driven by chips. So if you're a Warren Buffett type investor, you're probably thinking the chip business is a pretty good business to be in. Where is that industry now in its cycle? Obviously, there are competitors coming in from all over the world, from Korea and from China. So it's important to understand the industry in detail. What impact will consumer spending habits on this business? Of course, I just mentioned the chip business, but let's talk about COVID. What happened in the spending habits of consumers when COVID occurred? Well, I'm in the education business, and I can tell you it exploded vertically. People were starting to do much more education from home. What happened in the remote communications business? Zoom added 200 million users in the first, I believe, month. It may have been 60 or 90 days. It exploded. Okay, so the exogenous, the factors in the economy, the economic issues, the macro issues are going to drive what happens in a business, and has you as a lender, as an investor, need to think about that. Input prices, of course, materials. What are the central bankers doing? Now, what are central bankers? Each country has a central bank. That central bank controls the money supply, and it also impacts interest rates, and it impacts the ability for businesses to do business as a result. I won't get into central banks in much detail. The United States has regional central banks. Each of them is somewhat autonomous. They coordinate their efforts. Regardless, they, by increasing the supply of money, will lower the rates or flood the market with capital so that businesses can and financiers can expand their lending activities. Okay, let me just double check to see if there are any questions. I'm sort of wandering, but I want to give this in a way that makes some sense. Let me just see if my team has any questions. I do not see any questions coming in. Okay, either I'm boring you to tears, or I'm not covering this in simpler enough format, or it may just be that we're not just on topic today. Anyway, let's keep going. Macro indicators, again, some of the big picture things. I'm not going to get into this in much more detail now, but you can see that obviously inflation, what is the gross domestic product? How is the country growing? What are the tax policies? Now there's a huge discussion going on globally about should there be a global minimum tax? And of course, this is going to require massive coordination between governments. What's the regulations? What are regulations and how are they happening? Every time you hear any senator in the United States rail on a company in a Senate hearing, think there may be regulations, or that company may be under attack, okay, or that industry the company is in might be under attack. And I'm not going to put a value judgment on whether that attack is good or bad. I'm just going to say that it's happening. What is employment? What is production? Where are we in the business cycle, etc.? Microeconomic factors. So some of you who took economics in college or in graduate school were familiar with what is supply and demand, how are these drivers of the microeconomic factors within a sector going to drive the changes in business, the business dynamics. Going back to that very first slide that the first slide I talked about, the strategy and structure of a market. Again, we talked about some of this. What are the dominant characteristics of a business? What is the dominant characteristic of the chip business? I'll ask that question and see if anyone has an answer to it. One of the dominant factors of the chip business is that it's very fast moving and requires a lot of technical knowledge. Therefore, it's going to be constantly changing, and it's going to be highly driven by the needs in the market. It's not like the road construction business that pretty much has been the same for the past decades. It's going to change fast. So any business that involves a key input of technology is going to be driven in a much more rapid way. It's going to be much more volatile. It's going to be much more tied to the environmental conditions, public sentiment, consumer attitudes, governmental regulations. So it's pretty important that the dominant characteristics of the business are, in this case, what's going on in the market. It also might be pricing. Obviously, when Samsung comes out with a new phone, or Apple comes out with a new phone, Samsung and Nokia comes out with a new phone. So these are some of the dominant economic factors within a business. Let me see here. Competitive forces we talked about a little bit. What are the factors driving the industry change? What impacts will they have? What market positions do rivals occupy? Who is strongly positioned and who is not? Okay, now you're thinking, how the heck does this relate to finance? As I said before, it's about financial structure and strategy, and it comes back to I cannot invest in a company, I cannot make a decision about that company unless I understand all of these factors. Now, if you're a technical analyst in the stock market, you think this is not very important. If you're a fundamental analyst, you will look at all of these things. One of the roles that I often advise people to get into if you're interested in the finance business just out of college or just out of graduate school is as a financial analyst. There's a certification which we've taught many times called the Chartered Financial Analyst. And what does a Chartered Financial Analyst do? And what does a financial analyst do? And what did I do in my first job at a small bank in Philadelphia, since gobbled up by various others? What did I do? I examined companies, and that was what was interesting to me coming out of school, studying economics and studying business and international finance. So the first thing I did, I was given the name of a company that our bank was involved with. One of them happened to be the baseball card company, which was very famous. And all sorts of other companies. I remember going to see one of the first metal trading businesses in the United States, based in Philadelphia. It literally had pallets of metals sitting in its backyard behind its townhouse. So, got to understand what is the metals business all about? Where do they store these metals? How do they trade these metals? How do they ship these metals? What are the factors that drive the silver market versus the gold market versus the palladium market? Who uses these products? All of these things are just what I described at the top end part of this slide. So I want to keep it brief today. I want to cover these things in some level of high level detail. I'm going to ask for you to post the areas that you're interested in that we can cover and I can cover in future events, including how to create ideas, how to generate new business ideas and new entrepreneurial endeavors. And with that, still waiting for some questions to come in. We will conclude for today. Thank you very much. Appreciate your time.